October 10th, 2025, Bitcoin dropped from 122,000 to 104,000 in an hour. For a moment, I thought my screens had frozen. The candles weren't red anymore, they were vertical. 1 second the chart flashed 122k, the next it was slicing through 110, 108, 104. The sound in every trading room was the same. Keyboards, refresh key, disbelief. I've seen crashes before, but this one felt mechanical, not emotional. It wasn't politics or macro noise, it was the market's wiring melting under its own speed. Across the Binance exchange, liquidity vanished. Bids that should have cushioned the fall simply disappeared. 10 BTC at 108k, gone. 50 BTC at 170k, gone. Algorithm withdrew faster than humans could blink, and price fell into the void. 1 minute candles printed thousands of BTC in volume. That's not panic, that's whole architecture just collapsing. Hours earlier, large wallets had moved massive sums towards Binance, hundreds of millions in BTC and stablecoins. No one knew why. Maybe coincidence, maybe internal balancing. The timing alone set every rumor on fire. When volatility spiked, Binance market making code did what it designed to do, pull back. Without bids, every liquidation became fuel for the next. It's a feedback loop, mathematics with teeth. Imagine being 50x leveraged with a 1% stop. The market drops 15% in minutes, your stop never hits, there's no bid to catch it. Accounts vanish. Traders shouted that buttons froze, orders hung, screens went dark, yet liquidation messages still arrived perfectly on time. The system had enough energy for execution, just not salvation. By dawn, altcoins were down 70%, anything leveraged obliterated. And yet, zoomed out, it was familiar. Every major crypto cycle ends this way. 2013, 2017, 2021, and now 2025. A purge, not an apocalypse. The market inhales greed and exhales despair. I didn't touch a thing. My positions were spot, no leverage, and still up almost 100% from years of DCA and buying every major crash. When you learn to treat fear as data, chaos stops feeling personal. This wasn't the end of a story, it was the start of a reset. As funding flipped negative and price hovered near 104k, you could almost hear the market exhaling. The purge was complete. Liquidity gone, emotions drained, opportunity quietly being reborn. The morning after a crash always feel unreal. Charts look frozen, volumes vanish, and silence replaces hysteria. Traders sit in group chats recycling the same disbelief. It can't be real. Something's broke. But markets don't break, they reset. News portals scrambled for explanations. Politics, inflation, a speech, some macro headline, Trump tweet, etc. Anything to avoid saying the obvious. Leveraged, collapsed into a vacuum. Liquidity gaps don't care about opinions, they only respect math. Inside private channels, screenshots appeared, massive transfers hitting exchanges just before the fall. Hundreds of millions in BTC and stablecoins moved in tight clusters. Were they coincidence or coordination? Nobody knows. No proof, just timing. The internet filled in the blanks with imagination, as it always does. I didn't need theories, I needed patterns. I've seen this before. 2017, 2020, each purge feels different, but the rhythm never changes. When volatility spikes, algorithms step back. The liquidity disappears, liquidation engines go into overdrive. When the wreckage settles, the survivors are sitting on the best entry points of the cycle. My portfolio didn't need rescue. It's spot only, still almost a double from my first entries years ago. I don't play with leverage here. I keep that for regulated stock markets where risk is transparent and margin calls have rules. In crypto, I keep control. That's why I didn't panic. The market was simply doing its maintenance cycle. burning excess leverage so it could breathe again. By the second day, Bitcoin stopped falling and started breathing sideways. Funding rates were negative, open interest reset, and you could almost sense the market's heartbeat returning. Ethereum began to form its familiar pattern. Lower wicks shrinking, daily volume flattering. That's not weakness, that's exhaustion. Now I started accumulating Ethereum more aggressively again. Spot, clean, no hurry, just scaling into the same asset that outperformed after every major flush in history. Ethereum always catches the baiting when Bitcoin starts cooling off. It's rotation physics. People say investing is about prediction. It's not. It's about endurance. You don't need to know the exact bottom. You just need to still be standing when it arrives. The noise will come back soon. Headlines, influencers, narratives, but right now the silence is where the alpha hides. So I'll stay here, quiet, watching, buying when it feels uncomfortable, because discomfort is the first sign that opportunity has re-entered the room. Crashes always look personal from the outside, but inside the system, they are nothing but physics. Every market is a network of interlocking gears: leverage, liquidity, algorithm, collateral. When one gear slips, the whole engine grinds forward until it finds equilibrium again. Here's what really happens. When price starts siding, traders hedge or close. That pushes more orders into the book, which deepens the fall. At a certain threshold, liquidation engines activate automatically, selling collateral to cover borrowed funds. Each liquidation lowers the price further, which triggers new ones. It's a self-feeding chain reaction, leverage compressing into gravity. Now add automation. Most market-making algorithms are programmed to withdraw quotes when volatility crosses a limit. That's risk management, not sabotage. But when they all back away simultaneously, the book turns hollow. Suddenly, there is no bid, only air, and orders fall through it like stones through water. That's why every big crash feels faster than human reaction. Because it is. People see that speed and assume manipulation. I understand why. It looks choreographed. Giant wallets move, exchanges slow, liquidation messages arrive like clockwork. But it's often just feedback loops doing their job too well. The machine is impartial. It doesn't care who gets crushed. The irony, those same mechanics create opportunity. When leverage is gone, the market becomes healthy again. Volatility drops, spreads tighten, and price begins to reflect conviction instead of greed. That's the moment when accumulation quietly replaces liquidation. If you learn to read those transitions, you stop being the victim of volatility and start harvesting it. The indicators are always there. Funding negative for days, open interest shrinking, realized volatility flattering. Those are the footprints of exhaustion, the system refilling its lungs after a sprint. Retail traders hate this explanation because it removes all the drama. They'd rather believe someone pushed a button than accept that risk math works exactly as designed. But understanding structure is freedom. Once you see the code behind the chaos, you can position before the emotion. I don't fight the machine anymore. I let it purge. Then I build on the ashes. Because the only constant in crypto isn't hype or headlines. It's the rhythm of leveraged, expanding, and collapsing. And every collapse hands its spoils to the investors patient enough to wait for calm. When volatility dies, disbelief takes its place. It's quiet now. Charts stop screaming and traders start whispering, maybe the bottom's in? That hesitation is the bridge between fear and greed. Every recovery walks across it. The crowd doesn't believe in rebounds because disbelief feels safer than hope. They sold at the bottom and need the story of manipulation to make sense of it. That's why sentiment always lags price. By the time people feel bullish again, the rotation is already halfway done. I've seen these signs before. Bitcoin stalls, dominance begins to slip, Ethereum volume thickens, stable coins flow back to exchanges, gas fees creep up from 20 to 60 GWI, proof that on-chain activity is alive again. This isn't optimism, it's physics. Capital that left in panic now needs a new home. Historically, it migrates from safety into efficiency, from Bitcoin into Ethereum, and then outward into the ecosystem. That's why I'm accumulating Ethereum spot again. No leverage, no hype, just disciplined exposure to the asset that consistently leads every post-crash cycle. While others wait for permission from influencers, I follow liquidity. Liquidity doesn't tweet, it moves. Markets are powered by contradiction. The same traders who begged for cheaper prices are now afraid to buy them. They want confirmation, but confirmation is expensive. By the time the headlines say crypto recovering, early accumulators are already 20-30% ahead. So I scale quietly. Fixed amounts, fixed schedule, no emotion. It's not romantic, but it compounds. 5 years of repeating that habit turned panic into progress. Every crash added to my margin of safety, every rebound multiplied. This isn't luck, it's exposure discipline. If price drops further, I buy cheaper. If it rallies, I ride stronger. Either way, time and math do the work. Soon the noise will return. Analysts rediscovering fundamentals, narratives about the next halving, funds announcing new inflows. That's when the smart money starts streaming and the inexperienced start chasing. I'll stay where I always stay, early, steady, and unemotional. Because in this market you don't win by predicting the next headline. You win by acting during the silence that come right before it. The silence before the noise, that's when conviction is built. Most traders confuse it with boredom, but boredom is just the absence of adrenaline. Adrenaline doesn't build wealth, discipline does. Every great portfolio was born in moment that felt pointless. We call it accumulation, but it's really patience monetized. Now, a week after the crash, the same voices that screamed crypto is dead have started whispering again. They're back, cautiously bullish, pretending they never left. That's how it always goes. Fear, silence, denial, recovery. The only thing that changes is who's left standing when the lights come back on. I'm still here, still holding spot positions that have survived every purge of the last 5 years. Still compounding income while the impatient reset. Still adding Ethereum when the structure tells me to. Not when crowd says it's safe. Because safety is an illusion. Control is real. In the regulated stock markets, I use leverage. Here, I use logic. The difference is transparency. One is supervised, the other is a jungle. And jungles reward the hunters, not the tourists. People often ask if I get tired of repeating this cycle. The answer is no, because every cycle pays for the next one. The market is an infinite game. You don't win, you persist. You build systems that outlast emotion, rules that override instinct, and portfolios that survive panic. That's the essence of being psycho. Not reckless, rational beyond comfort. Seeing chaos and recognizing it as opportunity in camouflage. The October crash wasn't manipulation or miracle. It was maintenance. The system needed to purge leverage so new life could form. And now, under the surface, that new life is already pushing again. You can ignore it or prepare for it, but it's coming either way. So here's my takeaway for anyone who made it this far. The market doesn't owe you certainty. It gives you data, volatility, and time, nothing else. What you do with them decides whether you're victim or victor. Now, here's what I'm personally doing. Heading into what's likely the final leg of this cycle. I'm not chasing new narratives or trying to time every bounce. I'm holding my bags tight, the same spot positions that carried me through every crash in last 5 years. And I'm quietly accumulating Ethereum before one last push. When Ethereum reaches somewhere between 6,500 and tops at probably 8,000, that's where I'll start trimming most of my profits. Not because I've lost conviction, but because history tells me what usually comes next. Euphoria, then a sharp decline. Cycles don't end in fear, they end in overconfidence. And when that moment arrives, you'll want liquidity, not validation. So that's my roadmap. Hold through the noise, accumulate during disbelief, and exit when everyone suddenly feels like a genius again. But the next part, what happens after the final rally, that's a story for another video. If this breakdown helped you see the market through a clearer lens, make sure you're subscribed. I don't sell courses, I show you what I actually do. And every video here is another page in the same story, surviving volatility and turning it into freedom. If you are new to crypto and you want to start safely, use the exchange I trust. The link is down in the description. Set up your account, learn the basics, and start small, because the best way to understand markets is to actually participate, not just watch them. Comment below how you're positioning for the next phase. Are you still holding, accumulating, or waiting for confirmation? I read everything and your comments shape what I cover next. Welcome to Psycho Investor, where fear becomes data and conviction pays dividend. Stay psycho, stay profitable, and I'll see you in the next video.